This week, let me tell you, you'll need to buckle up because it's going to be a decisive week in terms of macroeconomics. We'll also talk about the criminal investigation into Jerome Powell, the Fed chairman, which could have a huge impact on the markets. We'll also talk about Donald Trump, who's coming out with something crazy, excuse my language, for January 20th in just 7 days. I'm going to talk to you specifically about that impact and how exactly it can influence the economy and the markets. But let's start off this daily update with a clear overview of the macro events. Stay until the end because you're going to learn a lot about what's happening, about what's brewing politically, economically, financially, macroeconomically, geopolitically, in short, all those aspects. So as always, not everything is listed in the economic calendar I'm showing you here, but there are two events that really stand out. First, we have the annual inflation for December, which is what we call the CPI. We also have the PPI for November, which is a key indicator for anticipating inflationary pressure in the production chain. And so it's a week where everything can change because starting Monday, the markets are already digesting Trump's statements. I'll talk to you about that in a moment, where he calls for capping credit card rates at 10%. So it's an announcement that's far from random, and I'll talk to you about it right after. We also have Tuesday when things get serious with the CPI. It's still today the most influential data for rate expectations. With the next meeting, I think it's in 6 days. By the way, we'll do a live session for that occasion. I think it's January 18th, the next Fed meeting. No certainty about that, that's just from memory. And in fact, it will be accompanied by the housing sales figures, which carry a lot of weight in growth dynamics and the real estate narrative. On Wednesday, it will be the PPI's turn to be closely watched this time to understand how prices are evolving upstream. And as if that weren't enough, we're also waiting for the Supreme Court decision on tariffs. It was supposed to happen last week on Friday to be exact, and for now, we still don't have a result, and it could have a negative impact if they are declared illegal. We'll talk about that in just a moment. But remember that last year, this issue triggered massive volatility in stocks, bonds, and even Bitcoin. And this is exactly the kind of week where sentiment can shift very quickly in one direction or in the other direction between inflation, politics, liquidity, and markets that could move. In short, you'll need to fasten your seatbelt. But in any case, you're prepared with the daily update. So we had our first thunderclap of the day, and not a minor one, because according to the New York Times, US federal prosecutors have reportedly opened a criminal investigation directly targeting Jerome Powell, the current chairman of the Fed, just to remind you. So news like this is obviously a shock because seeing the head of the US central bank potentially targeted by a criminal investigation is unprecedented in an already extremely tense economic context. And right after that, we had an immediate reaction from Jerome Powell himself, who made a statement that was very rare, almost urgent, which really shows the magnitude of this legal decision. And he responded directly to the revelations about the opening of a criminal investigation. And his statement is very clear. I'll tell you what he said here. Quite simply, he said that the threat of criminal prosecution is the consequence of the Fed setting rates, according to our best assessment of what serves the public interest rather than following the president's preferences. So, enormous pressure. In other words, Jerome Powell is implying that this matter is neither technical nor financial. He presents it as disguised political pressure linked to the fact that the Fed did not follow the guideline desired by the White House and Donald Trump directly. So, it's a way for him to defend himself, but it's also quite a heavy message because the head of the central bank is suggesting that the Fed's independence is at stake. To be continued. It will be fascinating to see how this case unfolds. And right after, precisely, Powell's explosive statement, the market reacted instantly because the US dollar was literally dumped as soon as Powell stated that the DOJ's charges targeted the Fed because it hadn't followed Trump's preferred interest rates. And when a country's currency is shaken by an institutional conflict of this magnitude, investors immediately look for safe havens. And in this kind of climate, it's always the same assets that benefit from the flight to safety, namely Bitcoin, then gold, silver, and more broadly, anything considered a hard asset, all such assets. And it's not just a market reaction here, but a protective move and political uncertainty affecting the central bank. Combined with a dollar that's actually falling, this almost mechanically creates a rather bullish environment for Bitcoin and the metals, precious ones. And what's really striking here is the speed of the movement, because the market didn't take long to think it over. It reacted immediately. By the way, while we're talking a bit, technical analysis, I wanted to talk to you about it a little. Because in fact, if we look at Bitcoin, it still hasn't broken its short-term upward trend. And even better, it bounced off a technical cost line to go after its next level. And I'll explain that to you now. Because if we focus on Bitcoin, the structure is pretty clear. We have a double bottom, a nice W, which is a chart pattern, just to remind you, that is typically bullish. So we have a cost line, which is around $90,000. And that's the key level at the moment. And so this famous validated W often triggers a clear upward move, which is exactly what we saw here. That is the rise at the start of the week, just before the days of correction. But in most cases, actually, the price comes back to retest its cost line. And that's exactly what Bitcoin did last week. And the green rectangle on the chart that I'm going to show you right here highlights this retest zone. And precisely this drop in the dollar that we just saw gives more strength to investors. And naturally, the rebound is seen immediately in Bitcoin. But before I talk to you about, well, the craziness, excuse my language, but it really is crazy here and with major repercussions, I wanted to mention something very quickly. Some updates on the Kojo app, which is my investment application. And today, we've added 2 major new features to Kojo thanks to your feedback. And as I told you, Kojo evolves every week. And the goal here is to give you tools to help you make real progress in your investments. The first new feature is the training portfolio, which you can see right here. What is it exactly? So, you all start with $100,000 in virtual money, and you can freely invest in 40 different assets, ETFs, stocks, exchanges, and cryptocurrencies. So, the idea behind this training portfolio is simple. It's to let you practice and test out strategies without it costing you a cent. We could even add a reward system afterwards for those who manage to grow this kind of test portfolio even more. And the goal is also to understand what works and what doesn't. So you can do DCA, invest all at once, which is called lump sum, reallocate your cash, sell, buy back, and so on. Exactly as if it were your own portfolio. Obviously, we'll highlight the best investors, just like I mentioned to you. That is, those who make the best decisions over time. Next, the second new feature is the Strategy Observatory. Here, we don't take action, we just observe. That is to say, we track you over time with several types of portfolios. So we have a conservative, moderate, and aggressive portfolio here. And the only difference between them is the allocation. So more or less stocks, more or less crypto. And thanks to this, you'll be able to see which allocation works best, depending on the market context, that is in the short term, medium term, or long term. And we've also added 2 100% Bitcoin portfolios, one with a lump sum investment, that is all at once, and another with DCA. And this allows you to compare down to the details which ones really work over time and which strategy suits you best. So let me remind you that Kojo's goal remains the same, which is to help you become successful investors and improve every day, to test, to progress. And let me remind you that we have a launch offer at €29 per month, and for 48 hours, there is a code. Kojo4, so Kojo with a 4 here, which allows you to have it at €25, and this for life. So don't hesitate to take advantage of it for 48 hours, and then it will go back to 29. We'll increase it to 39, no, to 35, 39, etc. So don't hesitate to take advantage of it. The code Kojo4, I'll put the link in the description as usual. Sorry for this interlude, but I had to tell you about these 2 new features. There are hundreds of you who have been waiting for it and asking for it, and we've put it into action. There are others coming next week. We're working on it to improve this app and make it the #1 app for investors. I told you about it, and to follow up with an announcement that could become one of the biggest shakeups in the American financial sector in several decades. I put it in the thumbnail and I mentioned it in the introduction. If you've made it this far, or at least up to here, congratulations to you. Because you've taken a big step towards the financial education that I try to share every day. Trump claims that credit card interest rates will be capped at 10% within 7 days, starting from January 20th, 2026. So, today, you should know that the majority of Americans pay between 20 and 30% interest on their credit cards. In other words, a large part of what they pay back each month doesn't even reduce their debt, but is only used to pay the interest. So, going from an average rate of 25% to a cap of 10% is almost cutting this burden in half or even more. And concretely, what does that mean? For households, it means less money will be taken by the banks, so potentially more money stays in their pockets each month. And this difference, this delta, changes everything because, in fact, they'll be able to pay their bills more easily and they'll experience less financial stress. They'll also be able to spend more, and above all, they'll regain a bit of appetite for risk. And the stakes are huge as well. Because the American market, let me remind you, and specifically the consumer credit market, represent more than $1,300 billion. And just in interest alone, Americans pay more than $100 billion per year to the banks. And if part of that amount stays with households, it immediately becomes additional purchasing power. So it's a direct injection of liquidity. And we've been short on liquidity lately. And this in the real economy. So historically, when households get a bit of breathing room, it's stocks that react first. And when stocks go up and the financial climate becomes calmer, crypto often ends up following. Because, in fact, the appetite for risk spreads. But be careful, because there's also a much more bearish scenario, much more negative. That is, banks actually earn a huge part of their margin thanks to the interest rates on credit cards. And if they're forced to cap them at 10%, their profits will mechanically drop. It's only natural. And then they'll have to choose between accepting lower profits or making up for the loss by tightening credit. And a tightening of credit is exactly the opposite of what Trump wants to achieve. That means credit card limits will be lower, and we could also see loan applications being denied more often. We could also see stricter conditions and potentially millions of households ending up with less borrowing capacity. In short, as you can see, now everything depends on how this measure will be implemented. Because if it's poorly managed, it can trigger a credit shock. But if it's well calibrated, if it's well balanced, it can give a huge boost to the economy and thus fuel a stock market rally. And, as is often the case, drag crypto along in its wake. In short, let's move on to an extremely strong signal. On Wall Street, that is, the largest American banks are now actively accumulating BTC through ETFs. And the numbers are almost dizzying. Because we have JP Morgan, which only had exposure at the time, a paltry sum of barely $700,000 at the start of 2024, which now shows over $346 million in BTC ETFs by the end of 2025. We also have Morgan Stanley. Maybe let's go back over the numbers. Here, Morgan Stanley, for its part, already entered aggressively in the first quarter of 2024, with over $250 million, but it has more than doubled since then. I don't have the right slide. I'll put it back up for you. I think I didn't display it here. Here it is. I didn't have the right slide. So, as I was saying, Morgan Stanley had 270 million, but more than doubled its position to reach around 724 million by the end of 2025. And in just 2 years, banks have gone from a few thousand to several $100 million of exposure. So we are very far from skeptical rhetoric or symbolic stances. And this time, there's no more debate because Wall Street has chosen its side. Institutions are no longer wondering if Bitcoin has a future. They are quietly and methodically buying it, just as they have always done with assets they consider strategic. And what individual investors perceive as volatility or fear, the big banks see as a long-term opportunity. By the way, I think I didn't save Cizette's tweet, which says that potentially we've entered a super cycle. But we'll talk about it and we'll have the chance to discuss it again. But now, let's move on to a really interesting point. To this chart, which really helps put into perspective what many call the bear market. So actually, we really need to put that in quotation marks. Because according to Kim Jong-ju, we're simply facing the weakest bear market in the entire history of Bitcoin. Because if you look at the numbers, it's striking. In 2011, Bitcoin corrected by 93%. In 2013 and 2015, we're talking about 83%. Same thing in 2017 to 2018 with 83%. And the 2021 to 2022 cycle was already less severe with a drop of 76%. And today, the current cycle shows 32%. So yes, but not really, because we still haven't touched the 50-week moving average. And potentially the drop, in any case, in my opinion, 2/3 or 3/4 of the drop is likely to happen between, well, I won't make any predictions now, I'll make a dedicated video about that, but potentially in 1 or 2 months. In any case, in my opinion, this is just my opinion, not financial advice. And also, I wanted to talk to you about the key level that everyone should be watching closely in case we end up facing a bearish scenario. So it's the well-known $79,000 level. I'll show you the chart right here, but according to an analysis from CryptoQuant, this level simply corresponds to the average entry price of ETF holders. Spot Bitcoin ETFs in the United States, so the famous $79,000. So basically, it's the break-even point for institutions that bought Bitcoin through these products. And why is this important? Because if Bitcoin seriously drops back below that level, we could start to see institutional selling pressure emerge, not just from retail investors, but on the retail side, but also on the institutional side. And many of these players actually operate with very strict risk models. And if the price falls below their average entry price, some may reduce their exposure and thus, in any case, aim to limit their losses or rebalance their portfolio. But on the other hand, as long as Bitcoin stays above that zone, potentially everything is fine. So there you go. I've given you a quick overview. Feel free to check out this video, which will be of interest to you. This was a bit of a FAQ video that answers a lot of questions about altcoins and the current cycle. Go check it out. It's a long video that I released for you yesterday. That way, you'll know more about my strategy and my outlook. I'll leave it for you. It's right there. And I'll see you tomorrow for a new video, another daily update. Until then, see you soon. Don't hesitate to comment, Kojo, Warriors, whatever you want, and share your opinion on this video. Thank you for being so loyal every day. It's always a pleasure. This was Julian. Bye-bye.